Hello, and thanks for watching this video. My name is Ben Frazier. I am the Chief Investment Officer at Aspen Funds, and I'm joined by Bob Frazier, the Chief Financial Officer of Aspen Funds. And we wanted to take just 5 minutes and talk about why we're excited about this Ironhorse Industrial Development deal. So you may have seen we've released this new offering just this week, and just want to give some more context and just some things we're excited about this in just a really quick 5-minute video here. And so first off, we've been working on this deal for over a year. And one of the cool things that is so good about this deal is it's what I call a friendly transaction. So one of our partners, Dan Schulte, he is actually on the board of a REIT that previously developed a lot of land in this submarket in Wichita, Kansas, and developed actually the other industrial properties on this plot of land. And so we intimately know this project, and a lot of the kind of dirt work has been done. And so it's really kind of just been teed up, and it's something we know really well. And so one of the things I always tell investors to ask is how do you source the deal? Because it's a really important question. Not to say that broker deals are always bad, but when you have intimate knowledge about something, it gives you a kind of a leg up. So one, we like this deal from kind of where it was sourced from, kind of the knowledge we know about it. And then two, and we've been talking a lot about kind of the mega trends around the industrial kind of part two boom. We've been talking about our mega trends video. We've linked to some episodes recently on the podcast, on the webinar that we recently did. Bob, talk a little bit just about some of the tides that we've been seeing here.
I'm super pumped about this deal and putting a significant allocation of my own capital in this deal. And the reason is we're seeing a massive mega trend towards reshoring. And if you don't know what's going on, I encourage you to watch our podcast. But we're seeing a massive return of manufacturing and inventory back to the shores of America. There's a deglobalization trend that is a massive mega trend. It's just getting started. And I want to back up the truck and get as much industrial space as I can. As we try to get into this space, we realized nothing is for sale. There's very, very little for sale. And so we thought, well, we'll build. And here we've got a build that is literally going to have, 20 to 25% IRRs. It's super fast. I mean, what's our total time horizon on this deal?
Projected 2 to 3 year hold, but hopefully on the lower end of that.
It might be less than 2 years.
Yep.
And so you get these kind of outsized returns in a very quick time frame, and in a massive mega trend. And we've mitigated all the risk. There's as you said, there's no the entitlement risk is done. The debt risk, we have fixed rate debt on this place. We have a G-max bid, right, of under $60 a square foot now, guaranteed max construction. So everything's kind of been nailed.
Right. So this is a development deal, right? So that this word development can sometimes scare investors. But you have to look at what are the risks you're taking in development. And so Bob alluded to that. So you have risk with entitlement, right? So if you're buying unentitled land, meaning you don't have the actual zoning or entitlements and approved from the city to build what you want to build, there's a big risk to make sure that gets approved. Well, we have fully entitled land. We have tax incentives that have been approved by the city. They love this project. It's going to bring jobs and really kind of build out a really acute need for industrial space that they're seeing in the submarket. We've got mitigated construction risk, right? So construction is a big risk in development. Well, we talked with all the big developers, all the big construction companies in the Midwest here, and the one we selected is awesome, family-owned company, been around for many, many decades, and they have a guaranteed max contract. I don't want to understate this, but this is very, very powerful because they are guaranteeing a max price per square foot. They're right now at $60 a square foot to build this, vertical construction, complete the construction. That's a big deal. So that risk has been taken off the table, right? We have financing risk is a big deal right now, especially in today's interest rate environment. Banks are pulling back pretty heavily. Well, we ponied up and we are putting our own personal guarantees on the line on this deal. All of our Aspen partners giving personal guarantees on this project and a very large loan. But because of that, and because of our relationships with our lenders, they have really come with some pretty awesome financing terms. So I talk about this in the webinar. You can see the specific terms, but we have 3 years interest only. We have a pre-approved, what's called mini perm period. So we have really a 5-year runway on this development deal when we're really projected to be out of it in 2. So we have maximum flexibility. We're locking in our interest rate. So we have fixed rate debt. which is a really big deal. And then really the kind of last risk that we're looking at here is tenancy risk. So filling this space up with the tenant. This is a speculative build, but you look at the submarket, you look at the macro picture, right? One, industrial as a whole in the U.S. is on fire. I think national vacancy is below 3%. Am I right on that? In this particular submarket, it's about 4%, and the other 4% is likely functionally obsolescent. I mean, you can't actually lease it up. So it means it's too old.
There's zero vacancy.
Pretty much zero vacancy. And there's a massive need in this particular submarket. Wichita itself has the #1 skilled workforce in the country. So it's a big manufacturing hub and actually a pretty big distribution hub as well.
Nothing of this size available.
Right. So we hope this gets you excited about this deal. We're pretty pumped about it, and obviously there's risk in any investing, so we want to make that caveat that you need to do your own due diligence, and we're not guaranteeing any returns, but we believe that this project is really well positioned to perform well in this environment, and hope you watch the webinar and decide you want to participate with us in this investment.